Hi, and welcome to Word from the Street. Today, I'm gonna talk about. We'll start with the market review for the S&P and the Qs. S&P is the SPY is the S&P 500 ETF, and then we'll do the Nasdaq ETF, the QQQ, and then I want to jump into doing a small review, you can say, or a small class on Fibonacci lines, Fibonacci retracements. So let's just look at the SPY first, the S&P 500 ETF. So what happened today in the market? Now, personally, I don't really look at the news. I'm not a news person, but obviously today we had Fed news, FOMC meetings. We got a little bit of an interest rate hike today. All good and well. Market knew it was coming. Nothing too crazy. We were up, closed down a little red. But what happened? Let's see. Let's look at the chart. I'm a chart guy, so I'll look at charts. And these are my fib lines. They have been done for a while. They were made around, I think, so this date, I think, or this date. So they have been made for, no, actually, yeah, they have been made for a while. Actually, they were made around this day, actually, when it pulled back. So they were made on 2/9, okay? So since then, I have kept my fib lines just the way they are. I haven't changed them one single thing. But I'll talk about it as we go forward. So let's see what happened in the market. From last today was Wednesday. So Monday we saw we traded between these two. One second. Between these two lines, 61 fib line and a 50 fib line. We were trading between. So we broke this 273. Now, when I spoke on Friday, I was expecting this to make a U shape and probably move up. Well, that didn't happen. Sometimes the news, Facebook had news that kind of threw the market kind of upside down, saw some pullback, but we held that. We held this 100 SMA line. This is a 100 SMA line. We held on to it. We held on to it nice. We bounced back up. We held on to it back over here, bounced back up. And then we bounced right back over 270. Now, we are holding 270 very strong from last couple of days here. Closed about 270, closed about 270, closed about 270. Very bullish. That possibly suggesting that we may have found some kind of a strong support at 270, as you can also see over here. Not saying that it cannot break it. If it does, then it has support at this 100 SMA. But even over here, it broke and bounced off 100, and then it bounced right back over that 270 pretty easily. There was no hesitation. There was no issues bouncing back over that 270 mark. That's a bullish. I would say it's a bullish. It's a very good sign that we have found some support at 270. I would like that to be held and possibly make some move to the upside. Now that we have got the Fed news out of the way, yeah, we have tariff news coming tomorrow. Now that could be something, but that's also been in part of the market. Like it's already been, we know that's coming, we know that's going to happen. I'm not sure how much that's going to affect the market tomorrow, but just be careful. If this 270 breaks, watch this for this 268 to behold. And if not, then you got support at this level over here, which is around this 263. And then we go down to the 200 SMA, which is quite far down. So that's a little bit of a exaggeration over there. But let's just keep an eye on 270 tomorrow and hope that once we can get that tariff news out of the way tomorrow, we're clear and hopefully we make a way up. Nasdaq ETF QQQ. Now, I have this 100 usually, and I will talk in detail about the fib lines, but I have this fib line, like I said, from this 2/9, from the all-time highs from here, and you can see how perfectly it has worked out, just perfect to the dot. And let's see what I mean by that. So We had a pullback, we went up. Great. We consolidated at the 78.6 fib line for almost about a week. For 5 days. 1, 2, 3, 4, 5. Perfect. The 6th day, we bounced over it. Great. And then we went to the 100, which made a double top. So one top here and a one top here. Double top. What happened after the double top? We pulled back. It didn't break through. It pulled back. It came down to the 61.8 fib line. Right here. It held on to it, tried again. This time it broke through it. And we had a nice rally, nice pop to 175 from 170. Great. Then what happened? We had a pullback. Then we tried to hold on to the 70, which was the previous resistance, became a new support for 4 days. But then Facebook had a news, which is a NASDAQ component, a tech component, which kind of made the QQQ take a nice hit and broke the pattern. Now the news can easily break the pattern. Charts doesn't mean that, okay, no matter what the news is going to hold. No, the news can easily break the pattern. So you have to keep that in mind, that the charts that I talk about are just that what can happen. If something happens with the news, the chart doesn't know what the news is. Okay, so the news can affect the charts easily. So keep that in mind. And if you see a pullback on no news, on no negative news, and you see a pullback and you see a support and you see it's been holding the support, then you can make a decision of going in the trade. So let's look at that. So it broke it, it came down, and then it held this 50 SMA line. It's black over here, but that's the 50 SMA. As you can see over here, that's the 50 SMA line. So we held on to it. We bounced back up over that 78.6. Now we are holding that 50 SMA and that 78.6 fib line. We have been holding it from last 3 days. So that 50 SMA looks like a very strong support. If that breaks, or it breaks this 166, then we can go down to this, 160, possibly to 164 and then 162. So I would like this to hold 166. I would like the S&P to hold 2700 or 270. That's just the market review. And then just my prediction, I could say, or just my knowledge of what could happen and what should happen and what can happen, I guess. So just keep an eye on these things. It's 167 support on QQQ, 270 on the S&P. Now let's talk about Fibonacci lines. What are Fibonacci lines? Well, Fibonacci lines, that the way I learned it last year, basically just tells you it's a calculated percent support and resistance. Basically, it's that simple. That's the simple definition I can give you about Fibonacci lines. It's a calculated algorithms. Okay, so you're not even trying to calculate. It's giving to you basically what the market has. Like, these are the studies that are made based on the market. You're not trying to create anything of your own here. This is just a algorithm that's been created by somebody that you're using. And that person who made this algorithm thinks that these percentage are is what the market uses. So let's just put it that way. So I have 5 or 6 stocks that I was told to do. So I'm going to start with Amazon. Now, what happens is that you're supposed to start the Fibonacci's from the high of the stock and to the support that you see, to the low, where you see the support. Okay. Now, my Fibonacci on Amazon, before it broke through this all-time highs, was from this portion. Let me just actually expand a little bit so I can. So it was basically from this portion down here. Now, you might ask, the all-time highs is over here. I agree, and I'm with you. Makes sense, right? But let's just look at this. You will start from 100%, and then you will drag it down to 0. And then in between, you're going to see this 50, 61.8, 78.6, 127. So the upper ones are giving you a price target, and the lower ones are giving you a support levels. Let's look at that way. Understand that part. So anything over 100 is going to tell you that's the resistance. That's where you're going to see some kind of a struggle. And then once you go through, you have a higher level. Same with the pullback. When it pulls back, you're going to see the support at the lower percent under 100. So when I had Amazon fib lines drawn like this, before it made all these highs, I'm going to talk about that, and then I will draw the new fibs. So you can see that obviously we pulled back in the market. So that's your new support. On 2.9, we had a nice big dips, corrections, whatever you want to call it. So we held this line. In my eyes, that's the new support. And then we made a rally back. Now 78.6, you can see over here was a resistance. And then it couldn't break. It tried once, tried twice, couldn't break it, down. Same thing, try it again. Now it went sideways in this region. Then tried to go up again. Then at 100, it went sideways. Then it broke through, again came down, and it held at 78.6. You see the pattern. Every time Amazon broke through each fib line, it came back and tested it. That's a very strong sign that a stock is, before it's breaking out, is testing the support. It's testing a previous resistance. That's a very good thing. So over here, it had a hard time. Once it broke through and came back down again, tested it, and then once it tested, it broke out, and it went all the way up from 1450 to 1620 in a week or so. That's what you call a perfect breakout. Now, obviously, it broke out, went higher. Now you would say, why didn't it go to 1646? That's what the 6161.8 fib line says. But don't forget that the market condition changed. The market condition changed that chart. But at the same time, it came close. For Amazon to be at that level, that's a pretty good. That's close enough. So think about that. And then it came back down. Now it did not go all the way down to 100 level. But if you look at this, again, before I show something, you will also find supports and resistance in between those fib lines. And what I mean by that is right here. And it's a perfect bounce. A perfect bounce from this level. So what you see here is, maybe just make it bigger. There we go. What you're seeing here is that over here, when you see this 3-day consolidation and couldn't break through this level, it pulled back, then it went through. And over here, it had a nice consolidation for 2 days. Again, it came back down to the same line right here, and then boom, back over. So that's what you got to keep an eye on, that even between those fib lines, you're going to find some kind of a support or some kind of a resistance. So keep an eye on those things. So we'll move on to the next one that I was told to do it is Visa. Now I'm going to talk about Visa. 2 different patterns I see. Now, obviously, this is a fib review, so we're going to do a little fib. I'm going to draw a fib line. So where do you think I will draw my? Where do you think I will start my fib lines? Obviously, from the 126.88. That's the all-time highs, all the way down to this 110.98. That's where we had a pullback, the recent pullback. Now, what are we seeing here? And this is also a perfect example of a breakout and then a resistance in between the fib lines, and that's where you gotta be careful. So let's look at this. Okay, so we made an all-time highs, we pulled back, we went up. Great. At this 50% fib line, we had a little resistance. We broke through. All right, went to 61, we broke through, came back down, broke through again to 78.6. Then again, the little market condition changed, came back, but then we held at 50%. What you're seeing here is that we are holding those levels. You're not seeing Visa coming down in the middle of no man's land. No, you're seeing that it's holding those levels, those Fibonacci levels, and that's what's more important to see. Even till today, when I watch these things, I get shocked. Like I'm like, how is it possible? Like how is this so accurate? It's not accurate to the dot, but it's accurate enough to be confident in your trade, and that's what it's good about. So when I see this, and I see it close, obviously it broke under, but it closed above it, and that's the great thing. And then it tried again to go to 78.6. So what you're seeing here is that in this entire Visa thing, now the 78.6 is becoming a strong support and resistance level. We are unable to get over it, right? We are unable to make a move above it. Now, like I said earlier, you're gonna find resistance in between the Fibonacci's. What I mean by that, right here. Visa had a hard time getting past that 125 level. It's been struggling at 120. Not just once. Before it made an all-time high, it struggled at 120. Struggled again at 125. From last 3 days, struggling at 125. So you got to be careful when you're entering. Now, I got in today. I bought these stocks today. I bought some calls today for next week because I saw some bullish activity coming in on this. But that's not the point of this class. What I saw was a chart. I'm seeing that, okay, you know what, it's been trying, and soon it's gonna go. Now, besides the Fibonacci's, other chart pattern that I look into this, and which I will talk about, which I will do a class on that soon. But let's just a quick, oh, come on. There we go. Sorry about that. What we are also seeing is a ascending triangle. You're seeing an ascending triangle at this price level of 125. That's perfect, right? I mean, you can't ask for anything. I mean, higher lows. Today we kind of closed at the lows. I understand, but we can easily kind of like gap up, and then once we break this 125.44, we have a room to go. And according to Fibonacci lines, we have a level of 130 that shows that 131 that shows us that that's where we can end up going. So this is important to keep in mind, that once we break that 121, 125, and then 126 level, which was the all-time highs, 131 is my target on this. So keep an eye on Visa as it is we're squeezed in this ascending triangle. Goldman. Now I am in this stock. I have some calls. I sold some today on the spike that I had at the 265, 266 actually, but I'm still gonna hold some for the earnings. So I think the earnings are gonna be good, so I'm gonna hold some for earnings. But now let's just look at gold. It made a all-time high on 275.31 on last week. Great play. You start from there. Oops. You start from there, and you bring it down to this level. Now what do you see? Magic. You see this, and it's amazing. And I'll show you something. You're like, oh, how come this is no man's land? We'll talk about that too. So as usual, starting from the all-time highs, coming down, and you can see that the 78.6 over here is a consolidation area between 78.6 and 61.8 here for a week or so. It broke out, like I said. Then the market condition changed. We had some tariff news. We had some news. So some kind of news I think happened that time. We had a pullback. Now you're like, oh, it came on just 50% fib line, and it closed under it, but it held on to this level. Now what do you see at 252? What are you seeing? I see this. I see a support. I see this support over here. I see a support over here. I see a support over here. I see a support over here. So you know that in between the fib, look at the 50 and the 0. There's so much there's so much gap in between those two levels. So don't feel that if it breaks the 50, it's going to 0 fib line. That's wrong. It's not going to 0. Try to expand the chart. Try to go further out in a time frame, and try to see where is the next support line. If you don't look at it, you'll get panicked, because that's almost like $20 gap in between. You will panic. And even after that, even after this 250, 251, there is a support at this level, 244. So there is the supports in between the fib lines. So don't panic when you see this big, big gap between the fib lines. That's gonna throw you off. What you want to do, what you want to look at, is fib lines. But now, like once Goldman breaks this 275, there's no other, because this is all-time high. This is all-time high break. Where does it go after this? 285. That's where it goes, 285. And then higher. But obviously in between you'll have 280 resistance, 285 resistance, and all that. But the 285 will be your next big price target, is what I mean by that. But try to find support and resistance in between the fib lines. But those 61.8, 50, and your 78.6. These three should be your key fib line support levels or resistance levels to keep an eye on. Google. Now Google's chart is a little crazy here, a lot of gaps in between. So it kind of throws you off when you are trying to do a fib line, but we'll do it. I don't know how it's going to look. I didn't try it. So we'll just give it a shot and we'll walk through it. So all-time high is at 1198. Great. Pulled back to 996. Great. Now if you think Google, why it came down to 996, we'll talk about that too now. So let's look at this, 996. Right here. So in a way, if you look, it's the same level as this. It filled that gap and it double bottom in a way. Right? So double bottom, filled the gap, everything perfect in Google here. Then it tried to rally, it pulled back. Again, you're in no man's land, but I'll show exactly why it bounced from that level, went up here. Again, I'll tell you why it did not go through all the way up. These are very small things that you gotta keep in mind. If you're trading, and if you're day trading or swing trading, you gotta know when to take your gains then. Because unless you're long and you're buying stock, it's a different story. But if you're playing options and you're swinging it a month or 2 months expiration, you gotta know in between resistance support lines. So here, Google bounced back up, had some trouble at this level, which is the almost a 78.6. But also, if you look at here in the past, it had some struggle over here. Then it break through. But this time we were unable to break through. Okay, then it came down. Now, why did it hold the support? Look at this. This is a previous resistance lines stuff over here. Break-in, failing, breakthrough, came down. Consolidation, breakthrough, came down. So that 1050 is a perfect level to buy Google, basically, if it holds. And then, so it held over here too. And then even over here, if you look, when it bounced back up here, even it went for 2 days at 1051. So that's perfect. Now, I don't play Google as much, but if somebody is playing and somebody just trying to play Google all the time, they're like, oh, look, 1050, I'm going to buy no matter what. Because in the past, if you look, it held at 1050, and you know that it's going to go at least till 11, at least till 1120. You know that. That's how you pick your stuff, pick your stocks, is because when you know these levels, I mean, you can just see it, and when you just can see it without thinking about stuff, that's when you know that you got it. Like you got your charts down. So when you see this and it bounced off the same level again here, went up. Now why did it get stuck over here? See this over here. There's no much. There's all these candles over here are just ugly candles. They're not good-looking candles. When I mean ugly candles, I mean profit taking, or like dip buyers profit taking, dip buyers profit taking. there's no there is no any kind of a confirmation that, hey, let's buy here. You're not seeing any big volume candles. It's just a bunch of these, wicks. So you call it them wicks, and it's just so hard to know that what direction is gonna go. It profit, buyers came in before the earnings, um, you know, hit that, came down, profit taking. Look at this big gap. Now it filled the gap here after the earnings. There's no other place to go, and now it's right now back to the 50 level and holding this 50 level, trying to find the direction over here. That's the thing. So you got to keep an eye on this. It can easily make a U shape from here and then go back to 1121 and then 1144 and hopefully higher. But keep an eye on this because this could be a nice play from here. There's too much stuff on this, so I'll take that back. Oops, Intel. This is the last one. Intel, I am in it, so I'm going to buy it. And I'm just kidding. So I'll show what my fib lines were prior to this all-time highs. So I had the fib lines right from this level, from the 50.88, and it was down to this level, 42. Okay, so what do we see now here? And I'm going to do a different fib line too. So I'm going to show both the sides of it. The one top, that was the all-time highs back in January. Double top. Couldn't break it, came down, held that 61.8 level, went back up, consolidated at that double top, which was also over here. Was basically, if you look, it was a triple, but the next day it was able to get out of it and broke higher. Now once it broke higher, it came back down, and now it's been at the same level, consolidating. It's been consolidating at that same double top area. That's a very good sign. And look at this, and it went to that 127.1 line. It couldn't break through though. It tested it. It had some profit taking, and it came down. So these the 127 and 161 fib lines are just a prediction. They are just giving you a number. It's not going to be accurate all the time, but it's going to be accurate for the most of the time. So it's giving you a price target. Doesn't mean that, it's 53.29, you went to 78, but you came down, and now it's just consolidating at this previous double top area, which is around 50, 51, 50, 50, 88, and 51 area, which is perfect. You want that. You want that to happen, and it's been almost what? Let's see, starting from 3.8 to 3.21, almost 2 weeks now. That's a great thing. That's a very great thing. And I like this kind of place. I like the place where the charts where I'm seeing consolidation. It makes me bullish because here it broke under and it filled this gap. You look at it. It filled this gap that it had over here, and it bounced back up. And then yesterday was a good day. Today it tried to go through, but obviously the market was all over the place. So, but I'm bullish on Intel overall. I'm holding some calls. I like to see this go higher and test the 53.29 and probably break through and go to 56. But let's look at the new fib lines now. So let's see. We start from the all-time highs. Again, the support is still that same. What do we see? Look at that. We are still at that fib line. We are different level, obviously, because we changed the levels. But again, we are at the 78.6 fib line. And these are by default. I'm not putting the 78.6 anywhere. These are the default percent of the Fibonacci retracements. So these are not just like, I made some numbers up and I put it in. No, these are just the default numbers, which is a percent by an algorithms that were put together to make those, to make it, which were made basically. So yeah, so now we are at this 78.6 level. We are holding it nicely over here. It's a great thing. Now we can hopefully make a U shape here and then test that all-time highs and probably go higher. Now what tells you here is that once we break it, we can go to 57 and then 61. This is just a price target, and then even higher to 72. Now that's just stretching it a little bit. But that's the thing. That's giving you a price target. Now with Intel, I want to do something different, and I want to show this. Let's look at some 15-year chart on Intel. No, I think that was something else. Never mind. So we'll just actually, give me 1 second. I want to show something real quick. I might be wrong, but let me just show something here, guys, real quick. Do this 20. I'm not doing that. 1 second. Let's do it. 20. There we go. That's what I was looking to do. Now we are at this level of 53. Intel's all-time highs are at 75. When you saw that Fibonacci that I just showed you, 75, 72 was the level of Fibonacci. You can see the consolidation in over this, 15 years on Intel. Great stock, great company. Everything is bullish about this thing, making a nice U shape. Look at this rounded base, rounded base. I mean, you can't ask for a better chart pattern on this one. What we'd see here is price levels. We are at this level. We are at actually around this level, 53.30, 50. Actually, we are at 51. So let's just take this off and let's try to put it at 51, just so we see where we are. 51, sure. So we are on this level. Now, once we break through this level, there's a lot of room to go. And let me just zoom in a little bit, and I want to go back and show this over here. We can easily test this 54 and then 60. These two targets easily on my watch list on Intel, 54 and 60. Now I have some long-term calls, so I'm gonna take some gains at 54 and then $60 pricing. So keep an eye on this. There's a nice, very nice base here on Intel. Double bottom on over here at 12 bucks. Not gonna happen again. So just keep an eye on these things. Keep an eye on stocks like these. What you see are making those long-term patterns coming into play. The rounded base and everything. So that's about it. But Fibonacci lines, so the Fibonacci retracements. Well, there's a bunch of Fibonacci studies over here. Fibonacci extensions, Fibonacci time series, time ratios, time extensions, arcs, fans, spirals. I have no idea what they are. I just learned retracements because they helped me. I saw them working, and I didn't trust these retracements from the day one. No, I drew them and I watched them. I watched the charts. I watched Caterpillar for a good week or so, and I saw that how it was holding the lines, how it was holding those 61.8, 78.2, and how it was getting stuck at those levels. And then I started buying small contracts, like 1 or 2 contracts, just to test that theory, just to test those patterns. And once I got confident, now I just play them because I'm a swing trader. I can buy today and I can sell it after a week because I trust those patterns. And once, yes, I have a stop loss limit, and once it goes under that limit, I would cut my loss, absolutely. But I would swing it, even if I'm red for a day or two. I'm buying it because I know it's gonna go higher when I see a pattern. Like here, I can see that Intel's pattern is looking to go higher. You can see that. They have earnings coming up at 426. So I know this is gonna go higher. It just makes sense to me. Not saying it will, but it definitely can. My knowledge says it might go higher. So I'm just keeping an eye on this, and I suggest to keep an eye on Intel as it can go higher from here. So that's about it. If you have any questions on Fibonacci retracements, leave a comment below on YouTube video, or you can also message me on StockTwist under Eye on Wall Street, or leave a comment in the chat room if you're on Discord. Next class I would like to do would be more on the chart patterns. I've done that in in a class, but not extensively. I've just shown an example, but I want to cover each and individual chart patterns individually and spend some more time on those. I think those are gonna be really good to know ascending triangles, descending triangles, and see those patterns more often, because as we see those more often in our day trading. So yeah, if you have any questions, shoot me a message, and I'll be glad to help you out. So that's all for this video, and thank you for watching, and have a good day.